All right. Hello, everybody. Thank you for joining. This is our Is FRAML Real? Some of the trends that we've been seeing in 2024 around that topic. Before we dive right into it, just a quick overview. We'll do some housekeeping notes and introductions of our panelists. Then we'll actually get into the discussion, and then we'll make sure that we leave some time at the end for some audience Q&A. A couple of these housekeeping notes here. This webinar will be recorded and a link will be sent out to all the attendees at the end of it. And then the audience is also on mute. Everyone has been muted. So if you do have any questions, you should be able to see in Zoom, there's a Q&A panel. If you want to go ahead and type any questions you have there, we can see them and we can read them out and get them answered for you as well. And so again, we'll have plenty of time at the end to try and get to all those questions for everybody. By way of introductions, my name is Jake Spiegel. I'm a product manager and a solution consultant here at DataVisor. My background is in AML. I spent close to 10 years doing anti-money laundering for JP Morgan. So I bring that kind of side of the experience into things. And then Brenda, I'll hand it over to you to introduce yourself.
Thanks, Jake. Brenda Banks. I am the VP of the BAS Solutions and BSA, and I have spent the last 11 years working with sponsor banks and building sponsor bank programs. Fong?
Yeah. Hi, this is Fang Yu. I'm the co-founder and chief product officer of DataVisor. I've been in the industry for more than 20 years, helping different industries fight against fraud and AML using the latest technology and platforms.
All right. Thank you both for being here and for chatting with us. Before we jump into some of the trends, I do want to, of course, level set, what are we talking about when we mention FRAML? It's the combination of fraud and AML, which historically have been very separated in most institutions. Fraud would usually roll up to one executive and AML would roll up to a completely different one. So we're talking two completely different organizations. There's been some push in the last several years to try and combine them, and for a variety of reasons. And that's what we're going to walk through here, some of the benefits and some of the trends that we're seeing of adopting or resisting adopting FRAML and what that might mean for organizations at some different levels and different points in time. So I want to start with kind of the evolution of AML and fraud into FRAML, specifically around how can this FRAML approach and integrating with FRAML aid in navigating these evolving landscapes of fraud and AML? And then what are some key challenges that we've seen when trying to combine fraud and AML? And Fong, I'd like to start with you and see to get some of your thoughts on this.
Yeah, so we actually see quite a lot of our clients actually moving toward this or already implemented or considering actually the FRAML integration. Economically, it actually makes a lot of sense because you only need to do one integration because most of the events needed for fraud and AML are very similar. So you do one integration, you can get actually both the fraud and AML solutions up. And it also provides the FRAML solution can actually make both fraud and AML works better. The reason is that for fraud, then the fraud side, you will get the feedback from the AML side because many of the SAR reported are actually coming from fraud. Whether those cases are actually suspicious, and in the end, it actually filed a SAR. So when getting those feedback, the fraud side, the rule can be more precise, or a model can be more precise as well. On the AML side, it also benefits a lot with the integration because with that, whatever fraud side detect finding suspicious can directly send to AML side without extra integration. Or the reason code, the review history, notes, etc. can be automatically in. So that way makes both the fraud and AML works much better. In terms of the challenges in integrating, if you already, because traditionally these two systems are separated, right? People have one fraud and a system, one have AML. So if you have one fraud system and adding the AML to it in the same system, then the challenges is actually getting a lot more data because AML look at a lot more events than the fraud. For example, all the cash transaction in the tellers or the ATMs, etc. So that's typically not actually heavily monitored by the fraud systems. And then also if you are adding the AML system, you already have AML system and adding fraud to it, then the challenge is more on the real-time nature, because many of the AMLs are actually running in batch, running at the end of the day, running at the end of the month. But if you get even end of the day, your data and it's still running fraud detection on that day, then all the wire can already go out on the line, the withdrawals are out. So it's actually getting delayed. So when we actually migrating to a both FRAML integration, ideally we actually want to more real time or even mini real time integration, or at least a mini batch integration, so that can benefit both the fraud and the AML side with the same integration.
Yeah, I think you make a really good point there, Fong, I think people focus a lot of times on the similarities between fraud and AML, but when you're trying to do a FRAML integration, it's just as important to focus on the differences between fraud and AML, because that's where you're going to get tripped up when you're trying to set this up. Like you mentioned, real time versus batch, different use cases, and even different products and payment channels that are being used. Brenda, I'd love to get your take on this as well.
Yeah, and from the BaaS side of things, I think that the challenge has been like the sponsor bank and the regulatory changes that we've seen with all the consent orders and things like that. So by combining the two, it would be satisfying the needs that we're hearing from the regulators, that they need greater visibility, oversights, controls in place. So one of the biggest focuses right now from we're hearing from the regulators is that the account balance and the transactions, as well as the alerts and the case management, the sponsor bank really needs a better view or look into the fintech's side of things. So by combining the two, it would give the bank, one place to go look for those things. So it would be a big benefit.
Yeah, I'm really glad that you mentioned that, because we talk about the evolving landscape of fraud and AML, and a lot of time we get too focused on the bad guys that make up that landscape, and we don't remember that we have to also focus on the regulatory side of things as well. Obviously, in AML, that's something that's keen on a lot of people's mind, but sometimes in the fraud space, that can get a little bit lost in the sauce there, that we do have to be aware that there are regulators and people that are looking out and making sure that things are happening, appropriately and within proper accordances. So that's a really good point there as well. Thank you. Our next trend that we're going to talk about is around signals and data orchestration a little bit here. How can a unified data orchestration help compliance in fraud and AML detections? And then also, are there any best practices that we'd like people to be aware of when it does come to this unified approach? Obviously, at DataVisor, we have a lot of experience with data orchestration. A lot of our customers use us as a data orchestration layer to pull in our own signals, third-party signals, their signals, device intelligence, and things like that. So we can help use a lot of that. But Fong, I'd like to hear some of your thoughts on how some of this can be better done in a FRAML approach.
Yeah, I think the FRAML approach can make both sides better. So for example, AML actually focuses a lot on the KYC signals, or how I know my customer, how the customer information. A lot of these signals may not actually be utilized by the fraud system today, right? How this client was registered, what information we know about the client, when they actually later on, when they come to actually do a deposit, a check, a deposit, why, where this client coming from, what the risk rating is. All of these actually are very, very useful information for the fraud to actually use. On the other hand, the fraud side also provides a lot of information in terms of the sometimes even doing the two-factor authentication of the users, continuous actually contacting the user because they change information. All of those information are very important for the AML system as well. So I think having both able to access the data that they have regarding the client communication, how they onboarding client details, and all the activities is essentially super useful for making the system better. And also, as I mentioned before, the labels, right? The fraud actually running a lot can auto adjust its strategies, because fraud currently usually fraud evolve very, very quickly. So the fraud systems are very quickly, you're running machine learning, you're running rules, you change every single day on your strategies. But the AML is actually more the strategies are more set and reviewed and approved by the regulators. So the involvement is actually much slower, but like having the label actually coming back and forth to see which is true alert, which is actually a false alert, can help both systems to adjust much more effectively.
Yeah, I think another thing around the data orchestration part is, like you mentioned this a little bit, there are signals that exist in AML that aren't usually leveraged in fraud and vice versa. But that doesn't mean that they're not useful on both sides of the house. I know in particular, things like device intelligence are oftentimes used very heavily in fraud for fraud detection, but AML teams very rarely get access to that. And sometimes it's budgetary. AML is always seen as a kind of a cost center, whereas a lot of companies are spending a little bit more on fraud to try and prevent the loss of money on that side. So if the fraud team has some fun tools, being able to share those signals with AML, with the AML side, it strengthens their ability to detect what they're supposed to detect, but then also to expand their repertoire for what they're trying to look at and build out some better rules because they're able to pull in some more data. So I think there's a lot that can be done with that orchestration and that sharing of signals between the two. Because if you're already getting this information, you should share it with whoever it might be useful for. I don't think any AML investigator or fraud analyst has ever complained about having too much information on the subject that they are investigating. So I think being able to bring all that into one place is one of the really powerful benefits of a FRAML approach like this. Our next topic here is right up Brenda's alley, as we're talking a little bit about sponsor banks and some of the needs for and the regulatory requirements around that as we move into a FRAML approach. So Brenda, are there some specific risk management requirements that sponsor banks need people to address from this fraud AML standpoint? And then of course, how can sponsor banks try and, become more robust and become better at doing some of this to meet those expectations using a FRAML approach?
Yeah, so, as the regulators have stated over and over again throughout the last years with consent orders and stuff like that, is the sponsor bank is really required to establish robust policies addressing the fraud and the anti-money laundering measures, as well as, the typical other areas like the KYC, the SARS filings, case management, stuff like that. They really must demonstrate to those regulatory bodies that these policies are effectively implemented by the fintech partners and that they can maintain clear oversight and control mechanisms. So they really need a full view of what's going on there to be able to answer the regulators, do their dip sampling, things like that. So, how do we accomplish that? Like I said, the consent orders have basically told the story that they need the oversight and the demonstrable control. So really looking to adopt industry standards, align that fraud and AML measures as an industry standard and best practices. They need to adhere to the recognized standards of that customer-centric view of the account holder. The sponsor bank has to demonstrate that commitment to combating financial crime and meeting their regulatory obligations. There is also really a need for tools to be put in place where that gives the oversight and the controls of the fintech operations. But the sponsor bank really needs to be the manager of that data as well. So within the tool, the bank should be able to set like minimum standards the fintechs have to abide by. And of course, they could go above and beyond those measures. But that's really key to making sure that you're meeting the regulatory expectations.
Yeah, that's great. When I think about it too, in terms of meeting those expectations, right? The more you can pull all of that into one place, right? You have one person responsible for your FRAML team instead of possibly two different executives, one heading AML and one heading fraud. So you have one person who has a clearer view of what's going on at the organizational level. And so there isn't oh, I didn't know that we had this happening over there. You have that kind of one point of contact, which I'm sure regulators very much appreciate and enjoy. But I imagine there's got to be some benefit there too for the sponsor bank. Could you elaborate maybe on little thoughts on that?
Absolutely. I mean, being able to see what's done with it with an alert to make sure that it was cleared properly and aligns with the bank policy is really top of mind right now within the regulation. They need to be able to show everything that was done with that client and why it was done. A clear audit path, reporting, things like that. They need an overview of not just the fintech individually, but as a whole within the sponsor bank portfolio to show that they have demonstrated all of the controls in place across the board for their fintechs, as
Yeah.
well as their internal business.
Yeah, I also want to add that for our client who actually coming from a sponsor bank or fintech, one of the ask, especially one sponsor bank actually like working with multiple fintechs, right? You don't want to actually necessarily duplicate the effort. So you want to have some like standard templates that systems that you are able to push to the fintech companies. So they follow, at least you run these kind of like strategies, and you need to generate this type of reports. So then they actually get more efficient for the fintech, because for the sponsor bank, because each fintech data is a little bit different and their business is also a little bit different. How do you actually unify that? Have a generic systems that have a generic report. So instead of actually I customize working with you, have a very specialized report every single one, that would be actually much harder. So we actually do have a client coming to us and asking for that. And then I think the multi-tenancy kind of like solutions help, because and they can have the main tenant actually kind of like putting all the key strategies requirement versus actually the each and fintech can also do something of their own, but they need to follow whatever the guidelines we have.
And that's a really good point, Fong. I mean, we have sponsor banks that I work with all the time that, one of their biggest complaints is the siloed approach. They either have to get reporting from different companies and try and marry that data, or get it from the fintech and try to marry that data to create the customer-centric view themselves. So having those tools put in place where they can have that oversight is going to be a big benefit.
Yeah, I would imagine that for the sponsor bank in particular, right, having a multi-tenant approach where fraud and AML though is in each tenant individually, right? They don't have a fraud tenant and then an AML tenant. It's all in one place. It has to make managing and having that oversight of all of those sponsees or all those programs that you're sponsoring a lot easier, because you don't have to go to 20 different places. You just have to go to, significantly less. And you get, again, that whole regulatory audit trail is all in one place, and all those risks and controls are all located in one place. So I imagine it has to be a pretty big boost there as well.
Absolutely.
Great. So now we're going to kind of go from Brenda's wheelhouse to Fong's wheelhouse here. I'm going to talk a little bit around AI and machine learning and how that can be leveraged in the FRAML approach. So Fong, we'd love to hear some of your thoughts and insights on how, machine learning and AI can help bridge the gap between teams in a FRAML approach, right? Help them communicate, and how can they both leverage that? And then, what benefits can we get from, if our fraud team has a model, can our AML team leverage that same model, or how can we try and get some of those signals across to be beneficial for each other?
Yeah, I think machine learning is not new to fraud teams. Because fraud involved very, very quickly. What the fraud looked like last month to this month is very different. Not to mention like yesterday and today can be very different. So fraud team is trying all possible methods, like all kinds of advanced machine learning methods, or the like strategies, and fine-tuning the rules all the time. So machine learning, like when we talk about supervised, it's you give a label, you train. Unsupervised, you kind of like capture new things on the fly, are very much needed for the fraud side. On the AML side, on the other hand, it's actually much less machine learning due to the regulation. Many of the strategies are rule-based. But tuning the rule is also very hard. Unlike the fraud side, I think the rule tuning is pretty like a fast. Sometimes even people use machine learning to tune the rules. At the AML side, I think for people, they typically we adjust the rule periodically, once a year, once several months, and to actually adjust the strategy. I think that building these things together can actually allow people actually see it. On the fraud side, you also ideally you need a lot of governance, or why you change the rule, you have the history, why you have documentation. But from the AML side, the AML can actually bring in a lot to actually increase efficiency. For example, what DataVisor does is actually we help, not necessarily all using the auto tuning, automatically adjust the rule without the user's notice, but we, at least AI first step can do the work and present options. So if you adjust the rule in this way, this is how much false positive you are going to reduce. And this is your impact on your manual review. And this is also impact on your cases, whether you are going to miss any of the cases. So if we are able to, the AI is going to do the kind of a tedious manual work for the analyst and finding those different parameters and explain what are the change of these rule and document what are the impact running a historical data of this parameter change. Then the analyst can just say, oh, okay, this suggestion is pretty good and it makes sense. It tested for me already. I can deploy it. So we want to use AI to enhance the rules, but actually with the human in the loop, that the human can actually see why the AI makes such suggestions. And that's actually on the rule tuning side. In terms when you actually have a lot of alerts, AI can also go in there and make suggestion on, based on all of these alerts, these are actually more likely to be suspicious, and these are more likely to be false positives. So it also can give some guidance, and it also highlight what are actually the indicator that this is actually more going to be suspicious. So it's also going to suggest what are help the human reviewer to operate faster and review the case more effectively. So that's actually on the AML side. Putting these two together, actually ML can also help facilitate like more detections, more interesting findings from fraud to AML. For example, in terms of the neural network, right? It's very hard to actually identify neural networks in ML because many things you're actually looking at the things alone. But if on the fraud side, if we look at the behaviors, right, especially using unsupervised machine learning, you're looking at the behavior. These mule accounts, because they are mules, they have same like goals. They actually are usually display a lot of similarities, and they form networks in terms of how they actually sending the money. So the network view on the fraud side can actually identify these mule networks and present it to the AML side, and then they see, oh, not only I find this particular account is suspicious, I'm not able to pull in a network of these, and these accounts are actually much more similar. I can review them all together. In some cases, I can even file the case together. This also helps increase operation efficiency a lot in terms of seeing the linkages between these accounts and also identifying these accounts in the first place.
Yeah, I think those are some great points there. And I think when we think about AI and machine learning, I think one of the big differences between fraud and AML, and then trying to bring that into a FRAML approach, is what have the regulators said you should and should not be doing? And of course, in AML, everything is about explainability to the regulators. And so there's a lot of hesitation about using something that many people consider black box, or even something like data visors that's much more transparent and visual, to be able to say, hey, this is how we came to these decisions, but we're still relying on machine learning to get us started. And I think that's a big difference, is like you mentioned with the rule tuning, if we could have it suggest the rules to us, but then we make the informed decision as the BSA officer to say, yes, we like this suggestion and here's why. I think that goes a long way to trying to help breach some of those gaps that we have from a regulatory standpoint. Because in fraud, if you get a suggestion for a rule that's going to make it better, you implement it because it's going to save you money tomorrow. But if you do that in AML and you don't have clear documentation about why are we doing each one of these changes, and a regulator comes knocking, they're going to have some serious questions for you. So I think trying to use fraud, people love to kind of use AI and machine learning because it can do a lot of that heavy lifting for them. The AML side of the house, I think it's much more of a starting point, right? Here are some ideas that you can start to explore, and then kind of defend those and come up with, rationale for why it does or does not make sense to go that way. I also really liked what you said about the mule accounts. I think that's, there are a lot of activity on the fraud side of things that we have patterns for, and that we're able to detect using supervised and unsupervised machine learning. And that can give very clear insights into an AML program. We also know that AML always starts with a predicate offense, and a lot of times those predicate offenses might be fraud. So if we can see someone trying to commit fraud on the fraud side of the house, and we can pass that immediately to an AML investigator right then and there, we know that if that fraud were to happen, that would have been something we would have filed a report on. So we can go back and look at similar activity for those customers and accounts and see if there's something that our AML rules might have missed that we actually should have filed a SAR on. So I think there's a great opportunity there to leverage machine learning and what it can do to try and unify these teams and like you said, kind of bring some efficiencies and plug some of those gaps on both sides. Our next trend is talking about vendor overhead, right? The ultimate goal, or one of the big goals of FRAML, is in combining these fraud and AML teams that used to be different, trying to bring them into one team, is hopefully we can save some money, right? Fewer vendors, more efficient teams. So I'd love to get some thoughts from the two of you around what strategies can an organization try to employ to minimize overhead with a FRAML approach? And then, what experience or what insights can you share around, efficiency gains and things like that with a true FRAML approach where we're combining fraud and AML?
Yeah, you can start with that. So, as you mentioned, Jake, the merging of vendors. Another big regulatory push is reducing the amount of vendors you have, reducing that vendor due diligence. So anytime you can condense that down into one, you're removing that siloed approach. Which is obviously going to be a huge win as far as the efficiencies and the cost savings. And then when we look at like reporting cost efficiencies, the auditors not wanting the dip sampling anymore, you can manage the data as a BAS provider and just really have a segmented view of everything going on to save the time that it takes just to go to the fintech and ask for that data. So, on top of just the savings from going down to one vendor, you're also going to have the time savings without having to go to your fintechs to ask for that data.
Yeah, I also want to add that the data is actually very, very important. I mean, not only the data for the regulator, but also for the operation team lead, right? So getting the efficiency report, how is your manual review team doing? How much is done automatically? If for a alert actually coming from the fraud side, how many different steps we actually need to go before the reach the AML side and having a report filed. So we can, if it's all in one system, it's very easy efficiency to telling you, oh, you spend 3 hours for average fraud review. And then if the fraud system documents good enough, we have a good reason codes to pass along. When the AML team pick up that case again, they don't have to do as much because all of the things are actually already documented. So that part of a dual expense is removed. And then and even sometimes you can merge the team so that you actually can go finishing up within the same team that they know about this type of fraud. And so that type of efficiency, when you actually put in new strategies, you can clearly report what's the operation efficiency, improvement in terms of combining the case, and then where is your bottleneck. I think that within putting everything data together, having a reporting on a daily, and then sometimes it's also, I would say that the FRAML approach some of our clients actually are employing is also very, very good for the operation budgeting, because that manual review team, so you have to over budget a little bit, because when the fraud attack happens, then you're not necessarily have enough people to actually manual review those cases, because every single time that sometimes it's just surge up, then you cannot will need to work overhead, overtime, and then finding new resource. But if you have a combined team with a bigger resource, then the amount of the time that you can actually shift around different teams is actually higher. So you have a bigger buffer that actually can allow higher a surge. Sometimes you have a higher surge of the fraud, and then sometimes you have a higher surge of the ML case, especially at the beginning of the month. So those combining team can absorb these costs much more efficiently, and you can have a better planning and have a more efficient team.
Yeah, in my experience, that was one of the big things. I know when I was an investigations manager, we did a lot of capacity planning, and in the AML side, we had different channels. And if one of those channels had a spike, we didn't always have the team that was trained to help with that. So we might have investigators sitting idle while other investigators were underwater. When I think of so we did a lot of cross training to try and remediate that. When I think you can bring that to the FRAML approach even better, right? Like you were mentioning, Fong, if there's a fraud spike, and if you have 10 fraud analysts and 10 AML analysts, they can't help each other out. But if you have 20 FRAML analysts, if there's a fraud spike, you can pull, all hands on deck and have all 20 of them work until that fraud attack is taken care of, and then siphon some of them back off to work on AML. Similarly, from the AML side, if you had a huge spike in SARS a couple months ago, and now you have to do your continuing activity reports, you can pull some people over to try and help out with that. It's obviously more complicated because you have to have people who are cross-trained and you have to have more continuing education and things like that going on. But the flexibility that it gives you to respond to spikes and decreases and the ever-changing flow of volumes, I think is incredibly powerful. And it just means you have a much more efficient workforce. So not only do you hopefully need fewer people to handle the whole thing, but you don't have people who are underwater while other people are sitting at their desk twiddling their thumbs because they don't have anything to do in their queue. So I think there's a lot of efficiency gains that can be made up from that. And I also really like your point about efficient handoffs from one team to the other, right? If someone is doing an AML or fraud investigation and they think it's useful for the other side, having that clear communication and that ability to say, hey, here's my fraud report. I think you might want to look at this. Or even better, here's my fraud report. I'm going to take a look at it from an AML standpoint and just keep going up the chain with one person. That way I don't have to read somebody else in on my investigation. I can just continue to do it all myself because we have a FRAML program and all those tools are right there at my disposal. I can go and do everything myself instead of relying on other people to help out with part of it and add confusion to it that way. A reminder before we move into our last trend here, if you do have questions at any time, please go ahead and put them into the Q&A and we'll be happy to get to them at the end. Don't feel the need to wait until the very end to go ahead and ask them. But with that said, we're going to move into our last trend here. And this is really around precision and decision making. Obviously, the goal for both fraud and AML teams is to be as accurate as possible. One, with your alerts, and then two, with what does alert, with how you decision those. We don't want false positives. We certainly don't want false negatives. We don't want to be missing anything that might have been risky. So I'd like to hear from both of you. Any thoughts on how can a FRAML approach try and help with our accuracy and our precision and our decision making so that we're capturing everything we want to be captured?
So maybe I take the first step and then I can follow. For the precision is actually very important for operations efficiency. If we generate a lot of false alert, then there's no operation efficiency. In terms of the precision, I think ML, of course, that we talk about can automatically learn from this, right? What you need to actually get is actually providing the feedbacks. Then the machine learning can actually learn from that. So the feedbacks can actually, for fraud, is a little bit easier because it can get feedbacks, for example, from the ACH returns, the chargeback labels, the client complaints. And then now with the FRAML, it can also get from the manual review decisions on the AML side, whether this. So all of these combined can actually adjust the model, adjust the systems. And then for AML side, the same thing, right? It's the manual review, although it doesn't have a precise label because sometimes you saw you don't hear back. But at least the manual review part can be a good label to actually adjust. When we adjusting the system, segmentation is actually very important, because if you don't segment the traffic, you say, actually, I have a generic model, no matter in fraud or AML, it doesn't work very well because you do not actually want to running the same type of scrutiny for a known good user, or it's a very established, consistent, good behavior user versus actually like a suspicious user. There are two reasons. One, if we're running on top, the precision will be bad. the second part, more importantly, the user experience will also be very bad, end user. So it's because some of them, for example, the fraud side, if you actually decline a user traffic, then the good user will feel bad. And even if you actually saying, oh, I send them SMS verification. Did you make this? Did you make that? The good user also will get very fatigued. Sometimes even the true alert, I will actually thought it is like could be I just so used to saying yes, and then I saw you to get so many alerts from my bank saying then I just ignore that. So the user experience is also very, very important. That's why the segmentation is critical in both fraud and AML. And I think both sides can actually learn from each other. Fraud segmentation is typically based on the product that they are using, based on the tenure of the users, and based on whether the account is in good standing or not. From the AML side, it's also some of these are similar, right? Whether you are a 10-year user, whether you actually have a good account, good standing. But the AML side also have a little bit more like KYC risk rating put into it, how you conduct the transaction in this way or that. But in general, the segmentation of the different user segment, we can run the same type of segmentation, or you can actually run different type of segmentation, then running different fraud and the AML rules together. And the system actually need to combining all of this and adjust it to make it truly precise. So I think this part is very critical for the operation efficiency, and also very critical for the user experience, and also very critical for the cost as well, because some of these for fraud side, for example, you see certain segment of the user are risky, then you may actually want to do second factor authentication or liveness text or ID verification, etc. All of these not only may affect the user experience, but also there's a significant cost associated with each of these calls. So we do actually need to optimize the strategy so that only small portion of this user and a small portion of these youth call out to the third party to conduct this additional checks. I think the same thing applied to the CDD part and the KYC part in the AML as well. So I think there are a lot to learn from both parties, and a lot to share as well from the FRAML approach.
Yeah, and that's a really good point, Fong. And I think on top of that, with the remediation path, anytime we can reduce friction for those good customers is a good thing, right? We want a good user experience while keeping the fraudsters at bay. So having that documented and being able to see where we need to actually spend our time doing those manual reviews, I totally agree. It was a big cost savings for the parties involved.
Yeah, and I think along the lines of that accurate remediation, right? We've talked about this earlier, but the more data you have, the better you can make these decisions. And we see a lot of times, AML side of the house is all about expected activity and expected behavior, whereas fraud generally is more about third-party ID verifications and things like that. But of course, the fraud team might want to know what someone's expected behavior is, because that can certainly help them make an informed decision if something is fraud or not, right? If Jake is expected to travel a lot, maybe I'm not as worried about him buying several airplane tickets. But if Jake doesn't travel a lot, I am very worried about him buying a lot of airline tickets. So being able to share some of those data points across each other, that's being, it's being collected and being used by a fraud team or by an AML team, sharing that with the other, just further helps you ensure that you're being accurate with your decisions, because you want to have all that information you can have there. I believe those are our 6 trends. So thank you both very much. I'd like to now open up. I see we have a couple questions here in the Q&A chat, but if you do have any others, please feel free to add them in here. And I'll start with the first one. And it looks like this is going to be right for Brenda. Someone here is employed at a sponsor bank, and they have a protocol in place for gathering the policies for their fintech partners. How can they guarantee that these fintech firms are effectively implementing the required procedures?
That is a really good question. We used to be able to have the fintechs provide documentation that they have these things in place, and that's no longer effective or accepted in the regulatory world. So you have to actually have a tool or direct access to the data to be able to prove that your policies are being met and reverse engineer it for the regulators. Having a tool where you can log in and see absolutely everything your fintech is doing as far as operations that involve the bank is really crucial in making sure those align with the regulators.
Excellent, thank you. And the next question here is, what is the regulatory attitude of the use of machine learning and generative AI in the AML space, and what's our experience? I'm happy to start with this one. In the AML space in general, nobody jumps before the regulators tell them that they have to. So you might get some people, particularly at banks, who are going to be pretty hesitant to use generative AI or machine learning, because if they start to use it before the regulators bless it and say that they have to use it, and something potentially goes wrong, they can get blamed for that in that side of the house. You might see some fintechs who are a little bit, a little bit less risk adverse, who want to try and, how can we streamline this? How can we do this better, faster, smarter? Who want to start to adopt some of these policies. I think in particular, generative AI has a strong potential in particularly SAR narrative writing. The ability to look at a bunch of transactions, say why it's suspicious, and then start to generate a narrative that then a human looks at and confirms. I think machine learning is right now in AML is really just being used for triage efforts, like Fong mentioned earlier. Which of these alerts has the higher likelihood of having a SAR filed? Well, let's make sure that we review that one first, so we're not worried about our SLAs. But absolutely, future state, I think there's no reason we can't have supervised and unsupervised machine learning models in AML. It just has to be something that regulators start to, one, encourage, and then two, to actually require people to have before I think we'll see a lot of it.
Yeah, I want to add that. So for us, what we help with the client in terms of using AI or even using like machines, I won't say the machine learning, is actually helping the AML analyst to prepare a lot of things to reduce the manual overhead. For example, you need to calculate what are the time between this suspicious alerts, what alerts trigger these events, what are those filling those forms. We all automate all of those. So the automated form filling, and also doing the math, right? What's the total sum of these transactions, whether in and out, and then also documents prepare a template. So you can say this person actually during this time, how many transactions, how many in, how many out, how many actually going from where. These are all fact. So instead of actually, I think having the machine writing a lot of a narrative, at least the fact part, I think the machine does much better job than the human, and also it's more tedious that we can offload to machine. So at least we can help with that part first. And then later on, when the regulator actually approved the learning of AI, we are able to generate the SAR narrative as well. But this is all based on, I think technology-wise, we're all ready, but it's the blessing of the regulators.
Great point. So next question is, would FRAML be successful if we only have data scientists working on combined fraud and AML model, or is FRAML more broader than data science and model development?
I think FRAML is much more broader than data scientists and then the model development. As I mentioned, they need to be actually a lot of strategies you to put in, even for fraud, right? You want to say this segment of traffic, you do this strategy, you call out, you verify with the client, and that's a segment of traffic, you do this machine learning models, and you actually run these rules. And then for AML, it's also more about the strategies and the rules. So it's not less, I would say, data scientists. Data scientists may actually help to find the best parameters pending regulatory reviews, but it's not. I think the FRAML approach is putting the whole solution together. How do we effectively solve the problem with the rules, the scorecard, with the models, and then to more efficiently find the suspicious cases and then more effectively review them. So the data science is an important piece of it, but it's not the only piece.
Yeah. And then we have another question here about the implementing of a FRAML approach via what's that like doing that on a platform like ours? And what's the timeline for implementing both fraud and AML versus just adding AML? And I think part of this here is, you know, from an AML standpoint, we need all of the transactions that you can send to us, right? Fraud, depending on your use case, you may not have fraud in every one of your payment rails. And certainly most people aren't sending us their cash transactions if they're a depository institution from a fraud standpoint. So it's making sure that we get visibility on everything. ATM deposits, teller transactions, and things like that can certainly, you know, add some time. And then also just understanding, you know, it can be some more data to pull in and some connections to get set up. We also have to, you know, we're now connecting with FinCEN and doing everything like that. Usually some sanction screening as well. So there is certainly more of an upfront lift. And certainly there's a lot more configuration of queue management and some data mapping and things like that. So there is a timeline adjustment to that. But it's certainly easier than implementing fraud and then implementing AML because we're getting a lot of those transactions already, right? You're probably already sending us your real-time payments, ACH payments, and things like that. So we have a lot of that already. And you're using the same platform for everything. So there's going to be a familiarity from a training and setup and step up standpoint from there. Fong, I know we're doing this with a couple clients. You have anything to add?
Yeah, so I would say that for the AML side, typically we need to pull the data from your core, all the information from the core. So it's actually one connection to the core to actually pull the all data. If we're able to actually get the data in a more like faster way instead of like a one daily batch, then if it's mini batch, we can actually even run some of the fraud just actually using the core data, because then the AML integration will include the fraud. So you won't actually need additional overhead in terms of the fraud because of getting a data. So the implementation time can be actually much lower. If you start from the fraud side, then it's much easier because you can actually say we start with ACH and tomorrow I add a wire but when we can't go into the AML side, then we still need to actually pull the data from the core for the additional information. So starting both at the FRAML approach, getting all the data in right away, I think it actually save the effort from actually implementing one later actually to add data for the other. So I think FRAML approach definitely works much faster. And then for data visor implementation is relatively quick. I won't say days, but in terms of the weeks. So we can integrate the system and have the system running.
Yep, absolutely. And then this last one, it looks like it's going to be for Brenda again. We have someone else who works at a sponsor bank, and during their recent FDIC audit, they stated that the sponsor bank needs to be managers of data, which is something that you mentioned earlier. So could you explain a little bit about what that actually means to be a manager of data?
Absolutely. So what that means is, as I stated earlier, the regulators are really saying that the sponsor bank needs insight into what those transactions and balances are on those account holders. So, you know, what are your fraud alerts? Where is everything? The bank really needs to have direct access to view those things instead of it being in a black box housed at the fintech. You need to have controls in place where you can access that data without going to the fintech. So basically managing all of the data that your charter is in charge of.
Great. Well, that's all the questions we have. If you do have more, feel free to reach out. Thank you both to Fong and Brenda for your insights on this. And thank you everybody in the audience for your attention and participation. We greatly appreciate it and hope everybody has a great long weekend coming up. Thank you very much.
You as well, Jake.